With regards to Russia, the critical component of the macro view has to be the price of Brent crude oil. But let me step back for a moment and speak a little bit about emerging markets as a whole, because generally, lower oil prices are beneficial to countries in emerging markets, with the exception of perhaps Malaysia and Russia, which are oil exporting countries. So therefore, what we see is that when we have lower oil prices, it actually helps to hold down inflation in most countries. In the case of Russia, last year in 2016, when commodities prices, including oil, were increasing, we did see a positive effect on the market and actual substantial capital appreciation. However, this year, we have seen some lowering of oil prices and questions about future ability to raise oil prices going forward. So based on that, we have been taking profit preemptively to make sure that we lock in some of that ahead of any decline in the market. And we really feel that with regards to Russia, because it has such a centralized government and the influence of Vladimir Putin is so strong, that we always have to know who is in charge of what company and whether they have a direct correlation to Putin or not, and also which oligarchs are in favor and not in favor with him. So that's a very important component as to whether they get additional resources to run their companies or not. In 2016, we were overweight Russia for the reasons being that oil prices were improving, and we did see generally stable government and also stable macro in Russia. However, we have been taking profit selectively in various things that we had owned in the country because we wanted to make sure that we were ahead of the curve in terms of taking profit ahead of any market decline. We have owned Lukoil in 2016, and into 2017 we continue to own it. It's one of the major oil producers in Russia and has low cost basis. It also pays a very regular dividend, so we've held on to it off and on since we started this strategy for quite some time. In addition to that, though, a new addition to the portfolio has been this year Polymetal International, which is a gold producer with a very healthy dividend yield. And we like this company because it's quite conservatively run, and this came out of a conversation we had within our team between the PMs and the analysts about what could we own in terms of gold, because we anticipate in 2017 that there will be some continued volatility, not only in emerging markets, but in the global markets. So we wanted to own a bit of gold, and this was one of the two stocks that we selected after a group discussion and further research. So we anticipate that they will continue to pay healthy dividends based on their gold production, and they will actually benefit from the increased interest in the metal as well.